one of the things that you'll notice is that the 75 we're talking about is around 4.5 billion Kenyan shillings. That's the earnings we were getting last year. We've already put in lots of incentives and motivation within the sector. We've identified the loopholes that were within the leather production chain, and as I'm talking to you right now, we are in the process of attaining the 12 billion Kenyan shillings by the end of this year, in fact. And one of the issues that we've done is, A, we've started building capacity at a very low level, especially the cobblers. We've trained 120 cobblers so far, and we've given them new impetus on how they can move forward with the sector. They've been developing the footwear sector in particular, which is very high value, and the leather goods sector, which is also very high valued. We're talking about an increase of 24 to around 47 small units in the country. That gives us an average of one SME in the leather footwear per county. So with that translation, therefore, then it means we are realizing some of the loss in the production chain. Then the other issue that is also giving us a lot of beckerage is that we have assisted in closing down the loss in the production chain. And that one was amounting to around 2.4 billion Kenyan shillings. We've kind of reduced that by half. It has also accumulated on our profit gaining on the top leather production. So essentially, as I'm talking to you now, we are at 9 billion. And by the time we take cognizance of the role of what the footwear is doing in this country, we will hit the 12 billion mark by the end of this year or the beginning of 2013. It is that much robust. The more you get synthetics, it means the less leather is going to be utilized in the country. However, I'm a believer of one thing, that once you have a product that is of the right quality and of the right pricing, Kenyans are very, very conscious of what they want. Because one of the things that I got from the street is that when you're selling a Kenyan shoe, they'll always ask you, is that leather or not? So that question by itself is positive, and it means that the moment we have enough production of good quality shoes at an affordable rate, this is the culture, we will definitely outsmart the synthetics. I'm not worried about the synthetics at the moment. What is my worry is to have the right investors in this country who can start producing or help this country produce good leather shoes. And we have a very leading shoe manufacturer from Indonesia. We have one of the leading Indian tanners and the biggest footwear manufacturer from India with us today. These are giants, and to me, I feel very, very honored and humbled that the country can actually host these two junctions. Officially, we are not exporting any raw hides and skins, but I can tell you that unofficially, there are some hides and skins that are leaving the country. But what is important here is that the government is sitting down right now as I'm talking to see how it can seal all that, and a policy is going to be announced very soon about how we can curb the illegal export of raw hides and skins from the country.
Talk about that.
The first obvious thing is that it was still a bill, so it was not discussed, it is not being implemented, and the government realized that there was a little bit of a misunderstanding within the whole sector, so it is actually bringing out a policy that will rectify all those. And sooner, I'm sure the hiccup will be addressed and we'll be back to where we were. We're talking about something like between 2 to around 3 billion Kenyan shillings. And to us, we need to act very fast at Kenya Leather Development Council, and that's why we are bringing on board the stakeholders so that we can, try to address some of those situations and make sure that the country does not lose out from the progress that we did. If you can recall, the statistics that came out from the Kenya National Bureau of Statistics show that the industry per se was growing, but we kind of slipped down, especially on footwear, by 8.7%.
Kenya has a vision 2030, where we have 3 pillars. We have the economic pillar. What is it talking about? It is talking about investment. And we are talking about the social pillar, which is talking about we are investing in our people, okay? People developing, okay? And then that's why I mentioned something about poverty reduction strategy, okay? And then we're talking about the political pillar. The political pillar is that we are working together as a team. We are one people, we are one nation, okay? Moving together. When we are working as a people, one country, we support each other in this strategy of development.
We're looking at Kenya, but we're looking at Comesa And in this particular case, we are looking at 3 countries, Kenya, Sudan, and Uganda. Our take in this is that we would like to develop the leather value chain. And like Mr. Rafik has already said, you need to create and to produce leather of a quality that is sufficient in order to make leather goods. Because the input of leather goods is so big because locally the quality of the leather is not as desired by the international market, but also by the markets here in the Comesa countries. People buy imported goods because they're fancier, they're more fashionable, they feel better, etc. So our intention is to improve on that, to make the leather so good in these countries, to make leather goods, and then with that automatically, naturally reduce the dependence on imports.